Welcome back. Thank you very much for staying with the South African Morning. Let's give you some of your business news now. Vincent Masoloke from the Citadel Investment Services joins us now for our daily market update discussion. Vincent, welcome to the South African Morning. Thank you very much for your time. Let's start with the markets and how they performed yesterday, how they closed. Anything we should look out for?
Good morning, Masego, and good morning to your viewership. Indeed, local markets yesterday, the JSE All-Share Index ended up 443 points, which is 0.52%. And mostly it was sustained by the JSE Resource Index, which rose 2.83 yesterday. And just to note, this is the biggest move in the resource index since September the 13th in 2024. And out of the 10 shares, 9 shares rose, while 1 share fell. Goldfields contributed the most to the index, and Vance increasing by 4.61%, and Harmony had the largest gain, increasing by 6.51% on the day. And then on the yields across the local government bond curve moved higher on the day, which means that prices were lower for local government bonds throughout the day. This has been the trend since this past Friday close. And on the rand side, the rand was largely range bound yesterday, trading between, let's call it 1755 low and a high of 1764. And this contrasts to a close that we observed on Friday at 1742 to the dollar.
Well, at least it's still under the 18 rands to the dollar mark. Let's take it to the international front now. All eyes, of course, will still be on some key US and China data coming out this week. And I mean, one is one of our biggest partners in terms of imports and exports. One is a partner that we would really like in terms of our exports. This is China, of course. The data coming out this week indicating the direction of the world's 2 biggest economies.
Indeed. Data out of the U.S. On Tuesday already, we had Empire Manufacturing Survey data, which points to a sluggish manufacturing PMI data that's coming out on the 1st of November. And on Wednesday, we had MBA Mortgage Applications Index, which fell for a 3rd consecutive week as U.S. mortgage rates rose sharply for a 2nd straight week to 6.52%, and this is the highest since early August. Later today, we have retail sales data for September, and then we have U.S. initial jobless claims, and all eyes will be on this data point because the market is expecting that the U.S. economy is cooling down. And as Jay Powell has mentioned, he's keeping an eye on the labor market to keep the Fed cutting rates. We have industrial and manufacturing production as well, data out today. And out of China, later today, I don't know if the data is out as it, I haven't checked, but we have 1-year medium-term lending facility rate, which is part of the liquidity toolkit that China uses to manage MPC. China's inbound non-financial foreign direct investment as well as out today. And tomorrow we have GDP data, year-on-year and quarter-on-quarter period. And then we have new and used home prices, month-on-month data, industrial production, retail sales, residential property sales, and 1- and 5-year loan prime rate data. And as we know, and the big thing out of China is that China is busy with the stimulus. The market is anticipating that eagerly.
Yeah, and we know that on the 30th of this month, our Minister of Finance, Enoch is expected to announce his midterm budget speech. So that's also something else to look forward to at the end of the month. Thank you so much for your time this morning. Vincent Masoloke is from Citadel Investment Services. All right, as the JSE actually prepares to open the markets in about 2 hours and 24 minutes time or so, here's a look at how the markets closed yesterday.